All right, welcome everyone to Monday. Hope you're having a great time. Obviously, it's the private hangout for Monday, looking ahead at the week of nasty market action. So, what do we expect, guys? Did you have a good weekend? Some of you still on the weekend. Did you have a good weekend, everybody? Yeah, private community got the special old intro. Just for me, the intro hashtag free the intro. Yeah, we'll maybe bring it back. It might make a resurgence in the future. Craig forgot about it. You gotta keep things away before they become better, yeah? You can't leave them on. Anyway, today's video, we're talking about, for anyone that's joining us later, we're talking about, of course, the indices around the world and the markets and what we think. We're talking about the commodities and what's going on. We're going to be talking about specific stocks and a little bit of crypto. Specifically, I want to start with the indices, a big top level discussion about how serious and how critical these zones are. So let's begin by talking about the SPY, the S&P 500. We're going to use the SPY code here because it sounds cool, and also it's pretty damn similar to the rest. So we've got a bit of a trend line that's come in. If I was drawing up, the key areas to be watching in terms of the bulls and the bears, I believe it all kind of comes to a crux around this location. If we close above this location, which is around that 445, let's call it, we know that the bulls are going to take control. I mean, it's very unlikely, guys, that the bears have any control after this point. We've got a double bottom on the higher time frames. You'll notice here the low, the intervening peak. You've got to be preparing for further bull pressure, even all-time highs, and it's something that a lot of people will be looking at. So I think that's an important factor. Let's just say it happens this week. That will be a big deal. Now, do I think it's going to happen? No, I don't, but anything can happen, hey? I don't think it's going to happen, but that doesn't mean that it won't. So let's think about what's so far going on with these moving averages. We've got a 20 and a 50 cross. These are the 20 exponential and 50 exponential, as many people are aware of. It's literally about to cross, or has basically crossed. We've got a trough that's incredibly important. 430, 430, 430, 430 will be the zone that we're watching this week, and we're going to have all eyes on that. So as you're all members of the private community, what I want you to do this week is I want you to look at the open interest by strike. Now, this is code TR-OI SPY, and then the date, which will be, in this case, the 8th of the 10th, as I say it. So the 8th of October, as Americans would say it, the 10th of the 8th. So you have to write it in this way if you're not aware of that. Now, why we want to look at that is we want to start to see where these put and call walls start to appear. It's going to be incredibly important on whether we can foresee a new low being formed. So right now, I don't know who the cowboy over here is, but someone's got these $380 puts open. Good luck to them. Maybe they'll make money. I don't think so. And then we've got a little bit of calls here. And then we've got a smattering of puts all across all of the major strikes of the SPY. So it's something that we're going to keep in the back of our mind. Every day, we want to be making sure we update this and get an idea of where our open interest strikes are. We also want to recognize that we have a lot of options still set to expire 15th of October, right on the 450. So even if the market bulls, we still expect it to stay below the 450 until the 15th of October. It just makes some logical sense. Now, if you were ever not trusting this kind of concept, remember, where did we close last week? So let's go back over to the SPY here for a second. So we closed at 434. Then we come back over to this and we think, okay, so where's 434? So there's 432. Right around 434-ish. Who were we paying? Maybe a few dollars to some of these puts. Expired, worthless, expired, worthless, expired, worthless, all worthless, barely worth anything. Who made the most amount of money last week? It wasn't retail, that's for sure. It was nasty, nasty Wall Street. Look at them. They have the biggest smiley faces ever. They're like, yes, we're the best. We kicked everyone's ass last week. We were the best. So 430, a point to watch here for the bears. We close back underneath this. We will most likely move towards 420, and then we want to start watching where the puts get opened. Remember, 420 into 405 is pretty much our worst case scenario. That's where we're thinking the bears could go to. And why is this? Because of the weekly 50. The weekly 50 sitting around those 405. So our plans for the week ahead. Closure underneath here, nimble and fast shorting, guys. If you are thinking of shorting the index, that's where you've got to be nimble and fast. Where the investors come back in, I believe around here. You could also look at the 420 as a potential investment level. Both of these technicals will be very, very big. Let's go down to the 2 hour again and consider the current resistances and supports. So we have the resistance here at around that 436. We hit 436, sold off briefly. And the 2 hour is giving us a very clear line to be looking at for the closure below. So if we got a closure below here, I believe it's on towards the short. So your trigger point's going to be somewhere around 420, 428.5. Closure 428.5. You should be triggering shorts. If you're triggering buys today, you're looking for this. Closure above here, movement back down, trigger off a buy into this peak or into the trend line. So be nimble, be fast. These are your two profit target levels. If you're going bullish, you're looking for it to get through here to go bullish. If you're going bearish, it should bear, which it is currently doing. And I wouldn't be surprised at all for it to actually bear a little bit more, maybe open around 432. But if we go down to the 1 hour time frame, that's going to be right where that little bit of resistance, little bit of support came in. So imagine if we open around there, about right, because the buyers and the sellers are going to fight each other here. The buyers are going to try to buy it through into that peak, then push it higher. And the sellers are going to try to push it past here so they can go and put pressure back on the 428 zone, 428.5. So there's some really big levels. And if we get through the low, I'm kind of hoping we do. I know a few of you will hate me for that. But I kind of hope we do get that nice big pullback that we've been looking for. Then the expectation is to move the exact same length as we first moved, which is this distance here. So we go into the 420. The 420 should be where we spike off to. So we've got some pretty good key take profit levels, pretty good key levels for everybody. Well, are you a bull or a bear this week, guys? Let me know. Great weekend. That's good to hear. Hello, Lo Yearlang says, hello, all and Tom, not working today, so I can be here. Awesome. Conscious Investing says, DXY also has just retested previous resistance. Another factor is risk off. NDX not looking great. Looks well worse. So we'll take a look at that in a second. Let's have a look at the NASDAQ. Well, firstly, let's just go through our two other things I want to do. So US 10-year coming back down. This is around where you expect it to be picked back up, 1.45 to 1.440. Previous supports become resistance. It's also a fib pullback. So what you want to do here is remember in an aggressive style trend, if you took a fib of the last pull, where is it? It just hit the 38.2. Where do we expect most aggressive trends to continue? 38.2 to the 50. We look for bullishness. Watch the 10-year this week, guys. If it cracks through 1.55 and closes above, it's real. It's going to smash the indices, specifically the NASDAQ, and pull it down. Is it short-lived? I believe so. But that's the type of thing that happens. DXY, someone just mentioned that before. Look at the daily. It's pulling back, and there's two key zones. You've got the previous resistance acting as support, and then you've got this little resistance over here, which could act as support. You put a fib on this level. Again, where are we? It's all about the fibs. The fib is down into the 38,250 zone. So this is exactly where you expect the dollar index to try to find some bullish continuation. Also think about legs. When we think about legs, we take the distance of this run. We then extrapolate that out. And we see whether it's a very similar distance. And if it is similar, then we can also look at similar pullbacks, which is exactly what it is right now. So remember, it's all about recognizing are trends continuously occurring. And if we get this similar pullback and it comes off again, guess what our distance take is going to be? take the distance, bam. That's what you're looking for. So dollar index starting to maybe a little bit turnaround here. That's going to put pressure, risk off, as a few people rightly said. US 10-year, the story is potentially bullish coming up. Dollar index, VIX I don't care about so much. And TLT will obviously show weakness should the 10-year spike. Conscious investing, I didn't read your next comment, but you are correct. Also, 10-year just hit 38.2 fib. Well, great minds think alike. Hey, Blue Maserati, good to have you here. Dav G says bullish start to the week, then bearish for the rest of the week. Ah, the old trap. So let's have a look at the NASDAQ. Some very bullish style candles coming out. I mean, this is technically a bullish candle on the futures. We got sell-off followed by a huge rally straight into our big problem support resistance area, the 14.8 to 14.750. This area, few problems. We've had nice looking rejection candles. I wouldn't blame people for selling on the Friday. And then it rallied pretty hard. Straight back into the exact same zone. It's a bit of a problem. We've got here 2050. We've actually got already a change of trend. So we have our peak, we have our trough, and we have our lower peak and lower trough. And this is why I'm effectively favoring the short. I am favoring the short, but I don't particularly care. I'm going to be nimble. I'm going to be fast. And that's what I believe most people should be in these current markets. Nimble, fast action. Some people are drawing this little futures-based trend line as well to be watched throughout the session. Closure above here. Some people are looking at it from the bullish perspective and then going, okay, well, I'm now a bull. I think that's a okay, fair scenario. We're probably going to open somewhere in this range here. Makes sense to open there. If we do go bullish early, we close above here. We look towards that resistance. And once we're through that resistance, then we allow ourselves to get back into the territory of 5-1, 15-1, 15-2. Same as the SPY. It all could end here should the bulls really want to regain control. The NASDAQ looks way, way weaker than the S&P 500. Peter says US budget passes, then bulls away. Possibly. I think that it will pass. So I'm not really concerned about that. It just depends if it's all timed correctly, if they allow us to get to our beautiful NASDAQ channel. Remember, I would like my NASDAQ channel to come in, or the community's NASDAQ channel, as I'll call it. This would be fantastic. What an early Christmas present we would have if we can get some NASDAQ channel. Now, I think I want to bring in an interesting point here to the private community. And I want to state straight away that when you're talking about technicals and you're talking about investment levels, let's say you believe this is an investment level and you buy it and you buy your favorite stock, let's call it Apple. You can't regret purchasing at these prices. So it could go, oh, it's the beginning and it goes to 12,000 or something like that. And you think, oh, well, that was stupid. Why did I not turn around? In investing, you're buying with a long-term approach. Now, I can't control what you're investing. I'm, in fact, not going to tell you what to invest in because you need to make your own decisions. But what I guess I'm saying is it's different. You're buying dips with the express and with the reason to hold them for a longer period of time. The trade here, if you were trading off this NASDAQ channel, would be to wait for the lightning bolt off it, to wait for the double bottom off it. And that will give you to wait for the double bottom off it. That's the type of thing you need to wait for. The investor will just buy the level that they're interested in buying because they've got a longer term approach to the stock and they're prepared to hodl it. Just remember, different type of scenario. So ultimately, this is what we're looking for. We'd love to see a 14,050, 14.1 on the NASDAQ. I'd be pretty excited for that. So we will continue to watch it. Let's move over to Tesla for a second here, just for the private community. Just wanted to quickly discuss this. It continues to be a pretty strong looking position. Now, Tesla had some decent numbers from my understanding fundamentally with their deliveries. Supposedly the chip shortage wasn't smashing them around as much. Maybe some loose lips why it's gone up already. This stock's been much stronger than the rest of the market. You do not expect Tesla to be at a 775 with the NASDAQ back where it was last lows. So it does show you that 800 will be a watch point for a lot of people, plus 762, plus you've got your trend line down. We're all familiar with this private community. We all know our key levels, and we all know the way that this thing trades. And 800 plus closure could be explosive. And I would suggest that using your technical systems, you could go and have a look at an 800 plus explosion. If it was to happen this week or even next week, when it does, it has a higher tendency to move towards that 880 because of the left-hand side of the screen. Mo says, could you please explain the relationship between TLT and SPX? It looks like TLT rallied during the COVID crash. Yeah, well, TLT is bonds, so it's going to rally people. It's all about money movement. So basically, this is how it works. You've got basically two things. You got risk on and risk off. That's probably not the best thing. Let me just quickly do this. So you got risk on or off. Okay. When you have risk off, money flows into two things traditionally, or three things. You used to have gold, you got DXY, and you got bonds. When risk is on, then obviously money goes into indices, US indices, stocks, etc. So these are just very basic, but this is the idea. So yes, when you understand the money system, you need to realize that if you're a fund, you've got to have you can only have a little slither in cash at any time. So a big fund manager will only be able to have this much of a slither in cash. So what are they going to do if they don't believe there's much value in the market or they've got a discount? At traditional times, they might hold this much worth of bonds, and that's part of their diversification. But when they feel like it's risk off, they will up their increase amount of the pie in bonds, and therefore bonds will go up because they're more in demand, and they will have to reduce their stocks. Now, this is why it happens. They always have to be invested. So they pull into dollar, then they put into bonds. And then they pull out of bonds and they go into stocks. And you need to understand that all of the system must be invested at all times in something because they are mandated to be invested. Charlie Martini says, historical, after 7-month bull run ends, the following month has been bear. No, yes, but that just happened. So the bear month happened, and then it's kind of like a coin flippy kind of thing. Whoops, where am I? Should be here. So yes, the 7 months in advance were good. And then we have the bear month. And then we have the month after that, I believe. I think this is the month after that. And it tends to be slightly, 64% bullish. So basically sideways. What we can't tell on these stats, though, is whether the market was down a little and then stayed down for a while and then rallied back up. But yes, overall, the next month has traditionally been weak, and then it was kind of like lackluster, and then the big rallies have come through. So you see here 3 month. We clearly need to get back into the market if we believe in these statistics within the next month, pretty much. Because if you're not in the market moving forward, statistics will have you say that you're missing out on some pretty damn good opportunity. And it makes sense. Rebounds occur. That's why. You had a strong market leading in. So the weakness was just a correction most of the time. And then it came through. There is one outlier. May 1961 was negative 10.4% on the 12 month. Hopefully we don't go back into that. We also had the outlier here. October 1980 was 4.4. But what you'll notice in both of these cases, what's really strange about it is the 6 month was actually both positive. Isn't that weird? So the 6 month was really positive, and then by the 12 month happening, it was terrible. Mountain Fortress says, I'm waiting for Powell to taper, then all in. I think the taper stuff is, look, I'll talk about it on the channel, but to the private community, the way I look at it is it really barely matters. They always taper a similar way. They always basically go with, the pretty terrible technique of looking after the market. I mean, they're basically full on capitalism. Yeah. It's all about looking after the market. And that's what I tend to find happens um, during the GFC into the last decade of everything to do with the Fed and everything to do with stimulus. They were not moving very quickly. They were very, very slow. Everything was slow. Chart to watch this week, guys, going to be Apple. This is going to pretty much tell us whether the market wants to go down or not. If Apple rallies and it ends up creating the double bottom, again, just another sign that the market's going bullish, and we have to realize that, and that's really going to be the key levels. Zones to watch this week: 145 on Apple. So we want to look at 145. Watch that from the resistance side, from the support side. We have this 142 zone still acting up, 141. If we close underneath that on a daily, we need probably a daily close. We know the NASDAQ, or at least we think the NASDAQ's going to come much, much weaker. We go to the 135, 130 for Apple, and that is the longer term pickup trend line, which many people will be looking at. There's the beautiful pickup trend line that occurred. If we go through some of the Friday session action, because we did get a bit of a rally, let's see where some muscle memory was. So Google came back incredibly strong. That was interesting. And we had Enphase that came back okay as well. So that was starting to rally. I still have this key area here of 160 to be watching, but some people are starting to get interested in this stock again. Could also put a little bit of a trend line through here this week if you're interested, and maybe start to look to scale in positions. It is a very ballistic stock though. So just remember, there is a little bit of a pattern here. I like the 160 myself. I'm patient, but it did move. Microsoft also rallied fairly hard, but it's back at previous support, becomes resistance. There's the support, there's the support, there's the resistance. You see it here, guys. It's why I'm really leaning into that weakness, because a lot of these big stocks don't look too fantastic. Let's keep scrolling through. What else have we got? We got pins showing some interest as well. This has been one that we've watched here for a while. It's getting close to the point where you've got to think it's starting to create a base. Now, there was an uncharacteristically large rally, but it got dumped straight off this trend line. And that's 2 dumpings now off this trend line and the 20 moving average on the daily. So the way I'd look at it is if it closes above the 20 moving average and the 55, I believe it's in repair, because at least from that time frame, because we have rejection, all off the 20. We know the 20 is clearly being respected. We do not want to be early on this because it is nasty looking stock, and the volume sucks as well. So I would like to see volume crack this peak. And if that occurs, remember, earnings now 32 days away. It's had a tendency to run into the earnings, this stock. So if it's going to recover, it will be soon on pins. We will continue to watch. Conscious Investing says, my Apple puts will print or I'll eat ramen noodles all week. Where do you have the puts, man? I assume you're selling puts. Interesting zone. CGC Tilray. Yeah, Tilray on support, but nothing up on this one yet. Still very weak across the board. Not even sure what I'd be looking at, whether I'd draw any type of trend line on this. Nope, I wouldn't draw any trend line, so there's nothing there. So all you're doing is just going, okay, can we get a double bottom past this 12, closure, some repair? Not one of my favorite stocks to look at. You really need the hype at the retail behind this one, because these stocks, if you look at the balance sheets, all of these marijuana stocks burn cash. And I'm not a big fan of buying companies that burn cash. Airbnb continues to be strong off the 20. If anyone picked that up, well done to you. It's still done okay. Netflix has continued to be very, very strong as well. One that we watched and looked at was Snap. So I think that's got a decent amount of muscle memory in it. It had that big rally. Remember, earnings coming up here in 23 days. Would I want to take it into the earnings? I would not want to know what the earnings is personally for this stock. But if it keeps holding this zone and we keep getting these recovery, remember there's good muscle memory here. So if the market starts to run, considering what happened, if we look at these resistances, $76, something like this, we've got that nice resistance coming across the board, potential closure above here, long leg doji. Could be some good strength there for the community in terms of Snap. I don't like taking it to the earnings, but the run into the earnings is another one of those discussions people are having. Another stock that I still like is Intel. I know it's boring. It may take a while to get started. So you've got to play this. I do this a little bit differently. This is more of an option style strategy. But a lot of people take it into November. We've got earnings in 18 days. So be careful there. Blue Maserati says, don't buy pins till 65. I think he says it's been so awful. Well, you don't have to be in it. I don't know how you're in it, Blue Maserati, but we haven't seen pins give us an activation yet. So until, like, that's the thing. It's trading and investing and everything is about being a patient, and patience is the hardest game. I mean, someone in the chat let us know right now, being patient is really, really hard. And that's the tough part. Disney, nice bounce from Kim. Let's have a look at Disney. I saw a few people pick this one up on the Friday session. Yep, that is a decent bounce off the 170. The key support we've got there. Looks like it's kind of almost double bottoming. You're in the middle of the range, and then we have that 186 resistance. So you're fully in a channel here. Again, certain option strategies. So option strategies would be best here. I don't think I would like to trade it personally. I would option strategize around the channel. That would be the way I'd look at it. Sounds like a put buyer. Conscious Investing says, I wish I had enough to sell puts. Well, you do. You just need to use spreads. I'm in the money, bought the dead cat bounce. I say you bought a put. Really have about 3% of my portfolio on the line. Yeah. Buying straight puts is a recipe of very expensive costs. You do need to think a little bit about the strategy there, Conscious. I would suggest possibly the options trading masterclass, which we're obviously releasing over time at the moment, which is available right now, because understanding how to use options to your favor, even with smaller accounts, can be done. But traditional, just buying calls and buying puts, I personally think is a recipe for disaster from a perspective of the just general extreme costs. JT Raj, you are correct about Penn. Good run, 8.52%. Yes, it is. And you've got the trough, you've got the peak, you've got the higher trough, and you basically have a marginal close above. So that for many people will be the early activation of getting some scale in here. It's off the right area. Makes sense. Yep. Looks good, man. Hi, hi, Tom. I'm eyeing off entry on Domain Holdings, DHG, on the ASX ascending triangle. Well, I like ascending triangles. Let's have a look. DHG, Domain Holdings. Coming off the 20. Yes, it is. Yes, that is a relatively good closure. Let's take a look at the weekly, make sure it was a good closure. Yes, it did happen on the weekly. Let's take a look at the 4 hour. Okay, let's go to the 1 hour. Yeah, it's an okay position. I mean, it's always hard and always tough buying these kind of already very expensive style kind of positions where they've gone to a new peak and they're coming back. But you are correct. A little bit of a downtrend here, maybe on the 15-minute or something, just in terms of a resistance you might be looking for it to break out of. This market is open, but it's the right zone. You are correct. Conscious Investing says FOMO is a SOB. Yes. Patience is the hardest. Totally agree. Especially when you hear of everyone being like, oh, I'm in, I've made $1 million on AMZ. Oh, I'm rich. I'm this, that, this. It's very, very tough. Yeah. Patience, patience, patience. You just don't trade every day sometimes. You know, you got to wait for your positions. You've got to wait for your positions. XLF is a question coming in here. Yep. We'll look at XLF. Nothing much going on in XLF. We've got our resistance clear as day at 39. And here is just a bit of a rally that's come through. Not a huge fan of taking the financials right now. I know a lot of people have been taking them and getting into them. But for me, nothing much here. It kind of just feel like it's stuck within a big range. Looking for a closure above that 39 to trigger a nice momentum play, similar to over the resistance over here. You close above, you get that momentum. That's what you want. That's what you want. I think the biggest issue we're going to find this week is that we have to continue watching indices. So we could have all these opinions about all these stocks. We could say, well, PLTR is terrible still, but we could say we like Netflix, we like Intel, we like DKNG at certain supports, we like PayPal, whatever. Ultimately, it doesn't really matter what our TA looks like here because, I mean, you look at PayPal, that doesn't look that great. I mean, you got support becoming a resistance. I mean, there's no doubt that's bad. You look at a lot of these stocks and they all look really, really weak. And then you go over to the NASDAQ and you say, well, where the hell are we? And it's nowhere land. Like it could be very short, very quickly. And if it's going to go bullish, you're better off actually trading the indices because the indices have the cleaner levels. You've got that clean support becomes resistance. You've got that downward trend. You know what I mean, guys? Like, I mean, I think the indices are still the better place to be trading. I know you might have your favorite stock. And remember, your favorite stock is more about investment, most likely, than the trade itself. So the indices are probably the better trade than the stocks at the moment, other than maybe Apple and the big ones. And then the stocks themselves are better investments than maybe the indices. What do you think about IWM this week? Nothing really changed. We're stuck in the middle of nowhere land. I don't care for this because look how hard it's been. Look how many false breaks this thing's had. Look at this. This is absolutely, I would not trade this for this reason alone. That is a disgusting trade. It's closed above the 225. Resistance, beautiful resistance, crack, beautiful trade. And then it does this to you. Why would you trade this? Then it gives you a false break to the downside. As soon as you see this nasty false breakout, you just discount it for the time being. You're stuck within a massive range. There's really nothing you can do. If the US 10-year continues to spike, this will go up. If the US 10-year, because it has so much financials in it. So maybe the better thing to do with the Russell is to look at the Russell ignoring the financials or to look at the different kind of indices. Yeah, different sectors maybe. But unfortunately with IWM, I just think it's trapped. I think it's been a better option strategy than anything else. You know, straddling and etc. Okay, I'll hand it over to the room. If you guys have any particular stocks you want to look at, I think I'll probably update the room a fair bit this week with some key levels. I want to see these indices open. I mean, I wish I could tell you and go through a whole bunch of stocks and rattle them all off and say, oh, I love all these things. But similar to last week when I was sitting there going, if you want to buy these stocks, do it at your own risk. You know, there's a lot of risk there. It's kind of similar this week where it's just such a key point. I could see why people are buying some dips here. It's better than it's been, but it's not fantastic. You know, Bitcoin had a really glorious breakout, had some actually great trades on it. I specifically enjoyed the Ethereum. The Ethereum was really good. Let's go have a look at the 1 hour. I really loved this. This could be a stock as well. It doesn't matter. Double bottom into an ascending. What a fantastic ascending. Series of higher lows. Phenomenal price action. Really great. That was fantastic. Peter says, and I'll read yours, Jade, in a second. Tom, if Triple Q gaps up on volume, what would you look for after the gap up to confirm market has changed to bullish? And so if you're talking about Triple Q, I would look for it to close above this little trend line down that you've got here, because you've got a lot of, see these rejection wicks? So I'd look for it to close above there with a time frame of at least an hour or better. And then I'd look for another, and I'd scale it, and then I'd scale another position bullish past there. And then I'd look for it to take to the gap. So 367 to 369 would be my opportunity. It's all about scaling in though. Recognize the closure, recognize the closure, recognize the gap close. Jaden says, g'day, Tom. And then after that, you're all talking about 374. Past that, yes, okay, you can get more bullish. Way more bullish. G'day, Tom. Could you have a look at gold if you haven't already? Yeah, sure. Have a look at gold. Take a look at the daily. Tough chart. Or is it that tough? Looks bullish, man. I'm not trading gold at the moment myself personally. I don't like it. But that does... I say like it looks bullish. Maybe use an 8-hour chart to detail it better. Okay, so this is a big close. This is a good closure here. And if you're bullish, I don't blame you. And there's a closure here that's coming up. There are a little bit of problems on the left. And then we obviously have the 1782 resistance. I think regardless, that's a good resistance, take profit. But I think it's also difficult to buy gold right now. I mean, you can trade any market, and obviously you're probably doing okay on it on whatever time frame you're choosing. I just don't like how convoluted it is. It's been relatively poor. This is the trend line you're trading at the moment. So this is what repair you're looking for, and this is what makes it tradable. So I don't blame you if you're bullish. It's a fairly significant closure out here. There's good take profits. It's pretty much hated by most people at the moment, which is also a market you may want to look at. And that's the first good sign we've had. Can you have a look at silver after doing that? Yeah, sure. We can have a look at silver. Similar, but not as cool. Gold has the better trade. However, silver will do something similar. Yeah. I wish it was cleaner. You just got to go with gold. And then you've got to go silver will move with gold. This is, I don't even know. Looks like a mess. Blue Maserati, Tom, if you, I'd you have a chance at BA. Oh, do you have it? Could you look at Boeing? Yes, we can look at Boeing. This could be cool repair. Love the trend line. Look how good that is. That is a phenomenal trend line. You know, if you see trend lines like that, you go, mwah, it's a beautiful. That is a beautiful trend line. It is closed above this resistance, which is good. We're looking for the final repair. And these value plays seem to be doing a little bit better in the market at the moment. 230 is where you need the closure out. And then you can start to look to scale in as it goes high. That's a very good trend line. Let's hope it breaks it for you. Dab G, just one quick observation. I've been keeping an eye on the fear greed index. The last time we had a weekly greed close was 8th of May. Has been neutral and fear ever since. 8th of May. What was happening on the SPX back then? Forgot. There's the greed close that you're talking about, and it sold off a little bit. Look, fear greed index, which is you're using probably the other one, not this thing, is always generally going to be geared towards fear. And the reason why is because, remember, the market generally will not go down while everyone's fearful. And what happened, like, think about it logically. What is the market more, bullish or bearish? Tell me now, chat. Bullish or bearish? What is the market generally? More bullish or bearish? And please don't answer incorrectly. I'll answer for you. Bullish, of course. So if you are always bullish and the market's always bullish and it's always about making as much money as possible, what generally is going to be happening? Lots of puts will be open. Tons and tons and tons of puts, profit puts. So when you have huge amounts of puts open, what does that allow the market to do? These are buy puts, go up. You'll notice that people hedge heavily. There were massive amounts of puts coming out of the global financial crisis on the indices. There was famously that one that Buffett took that was at, I think, 600. 600 on the S&P. He wrote a put to some of the banks. That's how worried they were about the market back then. And anyway, the market tends to go up when there's a lot of puts open. When there's fear, the market is bullish. When there is huge amounts of greed, the market is bearish. We haven't seen huge amounts of greed. We don't think the market is necessarily hugely bearish. It's just correcting due to all of these reasons that it has very good reason to get down on. You've got Evergrande, which is a serious, serious problem. Don't get me wrong. Like, I discount it because I think they'll fix it in this case. But mark my words, the amount of corporate debt in China is a monstrous problem. Do I think it's going to explode the markets tomorrow? No. It is a really bad problem. But if you really want to talk about the elephant in the room that's been there for decades, it's always going to be Japan and the European Union, but more Japan. Japan's ridiculous. This thing, I can't even quite boggle my mind about how much debt they have and how much of their own bond market they own. Like, if I worried about that every day, like I could worry about Evergrande, then I would not invest. I'd be sitting, I don't even know, not in cash. You'd have to go in something else. Because when you think about Japan, you think about $300 billion company going bankrupt as well in China. And you think about the bigger ramifications. Remember, where there's one, there's many. We learned from that from the GFC. There's a lot of them. They're all there. We let one fail because we had to save the other ones. You know what I mean? It is a systemic problem. But if you worry about it, you will freak out all the time and you will make poor decisions. It pays to be an optimist. Go and read, go and listen to Druckenmiller, a very successful investor. Don't listen to what he says anymore. I'm sure he says all convoluted stuff. But in essence, these big guys all tell you the truth in some ways, which is be an optimist, be greedy when others are fearful. Technically, S&P 500 will kick most big hedge funds' asses over the long term. That's what Buffett says, and it's true. And these principles do apply. We can't think about every risk. I mean, the biggest risk, as we know, is this reasoning here, which eventually will maybe happen. Market is a bullish beast. That's right. So you've got to be an optimist. You've got to ignore some of these things. Some of the best investors I know are really, really old people that have no idea that they own CSL. They bought it back in, like, the CSL's an Australian company. It's a healthcare company. They bought it back, many, many years ago for about $1. And it looks like, oh, you say, well, Tom, it's only $287 now. Yeah, but split like 4-6 times over. So this stock split a lot. They have it for like $1. And they've been hodling and they didn't even know they were hodling. So some of the best investors have no idea what the hell they're doing. And they've just got lucky with the best stock that they could have had in the Australian exchange. So my point is that you've got to be an optimist. You've got to just focus on the positives, and all these haters and all these people that say, but this reason. Look, if a real crash happens and it's not like the pandemic, we are all probably stuffed. There is no real way to be safe if the whole system comes down. Remember, when you're talking about China, you're talking about that Japanese problem, and you're talking about the Fed itself. If these things failed, do you know that your money is probably worthless? If they all, because they would all fail at the same time if they all failed in this big scenario. And you can tell me if you disagree with me here. That's fine. It's just my opinion on it. So do I think that's going to happen? Is it in the best interest of Jerome? No. Is it in the best interest of anyone on the Fed? No, they don't want that to happen under their watch. They want to be sipping pina coladas doing nothing. Is it in the best interest of China in their movement away from globalization into, obviously getting their economy self-sustaining? Absolutely not. As in the best interest of Japan? No, is the answer. So if it's not in their best interest and they have ability to plug it for a long time, then it's most likely not going to happen until it becomes so bad that it will be terrible for everybody. Take a look at Hyatt. Sure. Looks really good, man. He said it's the only thing looking great in the market right now. Yeah, Boeing looks pretty good too, though. Boeing, airlines, restaurants, and leisure. I agree. All of these positions look good. I hate airline stocks, but I got to agree with you guys. They're all the best technical breakouts. Look at Hyatt. That's a phenomenal breakout, man. Got to add that on. It's a very good breakout. Resistance about 90. It's a good percentage for this thing. So the recovery plays are all looking very strong into earnings, but it could be a buy the rumor, sell the fact. Remember this. There's the earnings, 32 days away. Got to be careful about that. UAL, United Airline. Yes. 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 Correct. Another good spot. Absolutely. Absolutely. Phenomenal accumulation. Volume came in strong Friday. Looks good, man. Do I like this stock personally? No, because I don't like these types of stocks, but these are very strong positions. These have come out of the darkness. Everyone forgot about them, and you're now spotting the participation. Correct setups. You saw that set up on Apple. You see that set up on Microsoft. You see that set up on TTD. You see that set up anywhere. It is strong. Yes. Recovery plays all ripping check car. That one I hate. I really, really, really don't like Avis. I know it's going nuts. It is an absolute sugar rush. You'll get exploded on this stock sometime. This stock, I've traded Avis over the years back in this area here, back in these lows and this stuff. This is very clear to me a problem on the horizon for this stock. It'll be its own self-contained bubble, but yes, it's ripping. And you could have gotten the breakout. There's the breakout. You buy, put your stop loss under here, and you've got a great rip. Marriott being great, but I don't know how much it can go. Well, if you look at all these stocks, other than car, you've basically got them all running into the previous peaks. And you'll notice the earnings again is about 32, 36 days away. So Marriott's probably on that scale out, scale a portion off and then look for new all-time peaks. Good stuff, though. These are all great trades, guys. You've done well. Ford, yes, Ford is very similar. Another great recovery position here coming through the trend lines. Nice base, nice closures. And it's hit the first resistance for me, which was here. I think I'd already take Ford out because of the motor industry, but the other ones have more legroom. MRK. Less good. I don't know what this is. Pharmaceuticals. So it's just like a random earnings announcement. Yeah, not a big fan of taking these. They always have like, oh, it's amazing. It solved something or whatever. And then it goes up huge. Everyone sells it because they've been waiting. They all FOMO sell what they all sell, which is correct. Retail buys it thinking it's going to keep running. And then it comes right back down and sits around here for a bit. So yeah, I think it's coming back down. Don't even know what they announced, but the point is that that's what they do. MRK had positive news this week. Sure. This week or last week? I guess it's this week in America still. Yeah, so this is just this traditional positive news dump. Pumpy then dumpy, as they say. Learn from the left-hand side. If it's had pumpy dumpy, this one might be pumpy, then pull back to a nice level, and then re-enter. COVID treatment, cool. So you're on the right track. I mean, Boeing's certainly one to watch. The tech stocks themselves look kind of not great. The Hyatt's a good one here. I like that. UAL is pretty good. United Airline Holdings. These are solid breakouts. These recovery plays are back. Give me some American Vegas companies. What do we got? MGM. How's old MGM going at the moment? So MGM's come back quite nicely. Actually, never really dropped, did it? That's a good little pickup there. Give me something else. Mama says, can you have a look at Go? Is Go? Go? Yeah, very cool that you're making money on it. It's going up. Oh, has it just hit resistance? If you're not in it, I wouldn't get in. Right around that resistance at this point. Win. Yeah, now Win has another problem though, yes? Because Win's been sick for some time. It is looking, oh, that's a pretty good breakout. Got rejection, 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 bullish closure. Nice breakout there. Look at these markets tank, guys, during the futures. Just lost 0.4% while we were recording here. Do you think growth or value will lead the recovery from the correction? And based on all this, you would think that value is recovering better than growth. But I will take value in rotation. From an investment standpoint, I would take growth. So if you're taking like growth concepts, like say you're picking up NASDAQ at that low, you would take the growth stocks all day because they have good price elasticity back to their highs. Whereas the value plays are just when you're in boring chop markets and you're looking for that rotation. Remember this year for a while there, it went all out of growth and then you kind of saw growth doing this. And at the same time, you saw value go heavy. That's when you want to move into it. That rotation is what's up. What do I think about TS Caesar? Like this? Caesar's Entertainment. CZR. Never traded this myself. Oh, that's well gone. So the win's just sick. That was the well gone there. All good. These are all doing well. TSM, Taiwan Semiconductors, in Chop City. Curious how you feel about TSM. Tons of chop, long time holding, line strong, major worldwide company. Yeah, great company, but still Chop City. I think that basically a very large channel that's been floating. It's one of those ones that you would place strategies on using options because you've seen a recognized channeling pattern. Support, resistance, all good. I think it's on support almost. Conscious Investing says Airbnb might finally improve. Yes. Christopher Collins says, Tom, we are going to send a special forces team from San Diego to extract you and Ty from Melbourne so we can get on with this Vegas trip. True. I saw a video from there a couple of days ago. It looks wild. Yeah, I don't know. A lot of American people have been messaging me saying, oh, Melbourne's crazy and there's people running around and there's cops going here and that. Come on, guys. We should know by now. It's a bit of fake news. I mean, look, there's people, everyone's annoyed here and we are clearly going to open because it's out of control. Like, basically all the good work of supposedly lockdowns is now out of control. It's, when you get 1,000, 1,500 cases a day, everyone's going to start getting it. So they're just going to vaccinate who wants to be vaccinated and do whatever they want to do. But I don't want to get into that too much. What I want to say is that it is not riots everywhere and stuff like that. There are tens of thousands of people that are annoyed enough to go do it. They are a very small section. Everyone else is just disgruntled. There's a lot of disgruntled people, yes, but it's not a war zone like the media would make you believe. MRK pill everybody hyped about last week. Oh, okay. VIX was low. VIX is still high. 21 is still high. Don't look at the VIX from a technical standpoint, though, everybody. It's just if it gets under here, we kind of pay attention to it. Been picking up Airbnb about 140, 150. Pretty happy. Yeah, Kunal's not too bad. Tom, thoughts on XLE? Winter is coming. I like the energy sector. US oil is obviously the one to watch. Energy sector been lackluster for a while. It's been holding pattern, broke out. Another value. You can see all the value is really starting to move here again in the markets. And this is the US 10-year. Oh, sorry, the US oil. So getting past 77 will be a big deal. 77 to 85, I believe. And we're already starting to get those articles written about 100. So when that hits crescendo, I don't expect us to get through 85, 86 very easily. So just watch that 77 on US oil. True that. I'm in Melbourne too. The media has probably overblown the situation. Yeah, certainly. That's what I don't like. I really don't like about the media about this. Blue Maserati says, wow, Tom, big Trumper, fake news, fake market futures. No, not really. I just think that if you think about it, the reality is I really don't. Yeah, the media itself is creating, I think a lot of hate. And I think that's the big problem. Anyway, I probably shouldn't get into it, but I think that stuff is unfortunate. I don't even read the news, guys. I read the financial news. And yes, I do call it fake market futures because there's a lot of traps in it. Just like there's traps in the media. I like to stick in my lane. And our lane here is finance. We talk finance, we talk markets, and we talk, how to navigate them. The news itself wastes my time. And I'll always remember it. I had to watch it every day with my parents, and it was fine and all, but I realized it was not for me. It's just depressing. I don't want to be depressed. I want to be excited about the market conditions. Yes. And yes, Lieutenant Dan, media makes money off the fears. Exactly. Miss L says, Tom, do futures tell us what the real market will do? Not really. That's the problem with them. The futures will open traditionally right on around the market, of which they've become very efficient. There used to be like the futures would close when I first started trading, and then the open market would happen and they would jump like 10, 15 points. They were actually mispriced heavily. It was weird. But nowadays they seem to open about right. What you're using the futures for really is just as a trading tool. So the good thing about the futures is you can continue to leave the position on after the market closes. So you can have the position on, which can be good and bad. You can use it, but I prefer to use my major key support resistance levels and big trendline levels from the real market. I like the futures more as the trading tool. Tom, any thoughts on Visa or MasterCard rebounding? Double bottom daily. All right, I'll check it out. I haven't been buying these companies in a long time. Oh, that looks like an inverse head and shoulders, man. Let's have a look here. Yes. Not bad, is it, on the old Visa? I mean, I still don't want to own it in my investment portfolio. I would not own this, but yeah, you are correct. That's correct. Let's have a look here. MasterCard. Another similar type of recovery situation. Bit too boomer for me nowadays, these ones. Do you notice Visa on Amazon is a 0.5% surcharge now because they had a spat? And I think that's my problem with these companies. I have a sneaking suspicion, guys, that in the future, the next decade, you won't be necessarily owning an American Express, a Visa, or a MasterCard. You're going to own a Square card, a PayPal card, whatever the new fintech is. You're going to have cards that are actually not part of those networks. Talk fishing, nothing to talk about if we can't go fishing, Duncan Dave, but eventually maybe we will. All right, guys, look, basically the story of this week, watch the indices, 10-year yield, and other than that, maybe a bit of DXY. Once we get clear direction from the indices, I'll update the private community with some key support resistances to be looking at technically. And then from there, we can really take our positioning better. If you're in those weird value plays like the Hyatt and other things, they look much better. They all look good. You sent me good ones. They look fantastic. Boeing's on a great trend line down that if it breaks through could be fantastic. And yeah, these growth stocks, it's all about finding the right NASDAQ point. Hi, Tom. Just on the news, Evergrande or whatever, I don't know how you say it, suspended. Reason for the pullback now could certainly be, Jassa. Could certainly be. But it doesn't surprise me. It's going to become was it owned by the government partially like the banks are? Remember, the problem there is corporate debt, and it is systemic throughout everything in that country. There is plenty of systemic problems, which many people in the know have known for a long time. It is, you don't grow an economy as fast as they did without having a couple of bad eggs. There's some bad eggs there, and the government's luckily rich enough to kind of overtake them. But it's all about the government taking over. They need to make sure they support the company and not let it become super systemic. Okay, guys, welcome. If you're new to the private community, we do this every Monday. I may have accidentally made this one partially public, I think. But if you do enjoy these, remember to subscribe. 7-day free trial over at fxevolution.com. The replay will be up in the Discord community as well for you to get to, and also on your website access. If you have feedback, let me know about what we're doing. I wish I had more to talk about this week, but really it's about indices at this stage. We'll catch you in the next one. I will see you in the streams. Remember, we're closed stream tomorrow. So that means market close Monday is what we're starting to do. And it will be a lot of fun. I'm excited. Got to get up really early, but that's more my action around the close. HK50 down 572 points. Yes. Is this chat earlier now? This chat's always been around this time. It's just for the private community. And the close is obviously the public ones. Kunal says the secret marketing tool opening up the stream. Kunal, smart. That's quite a large bad egg. Oh, there's more there. There's more there. Don't worry. I wouldn't even want to know what's really there, especially in the micro lenders. Scary stuff. All right. Be an optimist. Have a great day. Everything's cool. And we'll catch you in the next stream. Bye for now.